Hello, guys. What's going on?
Welcome back, Mike.
Again?
Yeah, we're going to do another 3-minute video. Business combinations in 3 minutes or less.
Third time's a charm. This is my third topic. Why am I doing it again?
Oh, you know, you're the only one here, so.
Yeah, I guess, yeah. Friday afternoon, media summit's gone. All of our CPAs are at home. Let's see, other people on PTO. Yeah, that's about right. Mike does it. Okay. ASC Topic 805 governs business combinations. Basically, a business combination is where one entity, the acquirer, obtains control over another entity, the acquiree. Now, there's two things there that we need to kind of figure out. Number one, does the acquiree, is it a business? That's very important under ASC Topic 805, because if it's not a business, it's an asset acquisition, and that's very different accounting. A business, integrated set of activities that is capable of being conducted and managed for the purpose of providing a return to investors. We have inputs, we have processes, we have outputs. ASC Topic 805 gives us some guidance to determine whether or not we're buying a business or buying a set of assets. Control. Control is a direct or indirect ability to determine the direction of management and policies through ownership, contract, or otherwise. So number one, do we have a business? Assuming we have a business, now we have to account for that as a business combination. Step one, determine the acquirer. Every business combination has an acquirer. You need to determine it. The acquirer is the one that obtains control over the acquiree. Use the guidance in ASC Topic 810 to figure out who has control. That's the acquirer. Step two, determine the acquisition date. That's the date that the acquirer actually obtains control. Okay. Step three, generally, we're going to recognize all the assets we bought, all the liabilities assumed, and we're going to recognize those at the fair value on the acquisition date. There are some exceptions to this, things like indemnification assets, things like pre-acquisition contingencies, reacquired rights, but generally speaking, all assets and liabilities acquired at fair value. Step four, determine the transaction price and determine goodwill. The transaction price, it's the cash you paid, it's the assets you've transferred at fair value, but it's also contingent consideration at fair value. It's also share-based payments, but be careful there. If you're paying someone to work for you later, that's really not part of the purchase price. So we need to determine the purchase price, and basically the purchase price less the fair value of the net assets we acquired, that the difference there is goodwill, and we're going to expense all the acquisition-related cost. If what you paid versus what you bought is negative, congratulations, it's negative goodwill, and you have a gain. Now there's a few other things here with the remaining moments that we have that I think we need to cover. Number one is non-controlling interest. This is where you don't buy 100% of the entity. Those are part of the family, they're part of equity, and we need to measure them at fair value. Number two, measurement period adjustments. Sometimes when you do a business combination, you're doing it kind of contingently and you don't know all of it. It's a lot of estimates, a lot of judgment. Well, guess what? You could say, hey, I'm going to do it at this value, and then later I'll adjust it later. That adjustment goes to goodwill, but it's not a blank check. Not a blank check, just be very careful there. And finally, there are some private company alternatives. You can amortize goodwill over 10 years, and you can have limit your recognition to customer-related intangibles to only those that are capable of being sold or transferred. Obviously, there's a lot more to cover than we can cover in 3 minutes. If you'd like to know more about business combinations, check out the GAAP Dynamics Learning Library, where we have 3 courses on accounting for business combinations in accordance with ASC Topic 805. That's all for now. Take care. Put it directly in my pants. The cord.
In your pocket.
Yeah, and then the little thin cord is coming out through my zipper.